If it goes 2 months and never breaks down underneath a moving average, who am I to tell it when it should stop, right? That's trend trading in a nutshell. Let the trend go as long as it can, and once it starts to reverse, that's the time to get out. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021 so you can get access to right now at OVTLYR.com. That's OVTLYR.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we are going to be talking about trading habits. In fact, we're going to be covering this in a multi-part series, because you know I love a good multi-part series, 39 of the world's most powerful stock market rules. Now, this actually comes from my friend Steve Burns. This is his book here. We've had Steve on the podcast several times before. Steve is also the founder at New Trader U, so be sure to check that out. And also, pick up a copy of Steve's book, Trading Habits, 39 of the world's most powerful stock market rules. And I did get expressed written consent from Steve to go through these on the podcast, so I think this should be some pretty awesome content. So today we're going to go through the first 4. And we're going to have this going weekly. And let's get right into it. So trading habits, 39 of the world's most powerful stock market rules. I would like to point out the power of habits. The right trading behavior starts as rules and evolves into habits. Now, I've actually had Brett Steenbarger on the podcast, which is so cool when I see people like that. So if you haven't done that already, head back to an old episode and listen to Brett talk about all of his stuff that he talks about, trading psychology. All right, we're going to move on. Focus on being better today than you were yesterday. I totally agree. Now, this is just an introduction. We haven't even got into the habits yet. But by focusing on today, getting better, you should be able to translate that into personal gains, right? If you're better at anything, at being a parent, being a stock trader, being a Lego builder, whatever the case is. I have Legos here on my desk. Here's some background information. I love Star Wars, and I have a bunch of Star Wars little minifigures right here on my desk in front of me. This could be one of my favorite. It's R2-D2 stacked with BB-8 stacked with Baby Yoda. So yeah, anyway, totally off topic. But you always got to focus on being better today than you were yesterday. So let's go into the foundation. So the first section, rules 1 to 15, Steve laid out as the foundation. And his number one habit, a winning trading system must either be designed to have a large winning percentage or big wins and small losses. And in fact, I recently downloaded a trading simulator, a Monte Carlo simulator, right? So let me pull it up here on the screen. Here. So Steve says you need a high winning percentage or big wins and small losses. So let's go through that. Let's say that you have a high winning percentage of 85%. And let's say your average win is 100, your average loss is 400. Run the simulations on this. It's going to do 1,000 Monte Carlo simulations. And when that finishes, I'll turn this down so it doesn't take so long on the next run. You know, profitability wise, even with the 4-to-1 win to loss ratio, if you're winning 85% of the time, the average of this should show a positive return. So that's pretty cool, right? And that's Steve's point. Now, if we take that loss win probability down to 50%, that's going to be a totally different story. In fact, let's change this to 250 simulations here. That will show a holy cow, that's huge. Over 365 trades. I mean, you will never make money on this ever, period. With a 50% win rate, a $100 win, $400 loss gives you an average return of negative $55,000. Good gravy. Okay, but to Steve's point, a winning percentage isn't the entire holy grail, right? I was running this simulation the other day, and I was like, this is interesting, right? So imagine you had a 25% win rate. So 3 out of 4 times you're losing, but you win 400 for every 100 you lose. Recalculate. Run simulations. You'll see that the average return would be $8,445. So really the point is that you can have a high win rate, but you have to have a low drawdown. The way I think about it is like, let's say if you had $100 in your account, just round numbers here, right? Roll with me. And you had a 20% win, that took you up to 120. Now, if you had a 20% loss, so 120 times 0.8, you're now down to 96. So you won 20%, then you lost 20%, but you're not at break even anymore. You're actually down. You're actually down $4 on this. So the losses work so much faster against you, right? So imagine you had a 100% win, right? So you had a $100 account and times 2, that's a 100% win, $200, right? And then you had a 20% drawdown, which doesn't sound like much. So that would be 200 minus 40. Now you're out 40% of that 100% gain you just made. So yeah, the math really does support Steve's fact here, that it must be designed to have a large winning percentage, like a very large winning percentage, or big wins and small losses. And when you combine those, if you can combine a high winning percentage with big wins and small losses, you're going to do really, really sharp. In fact, Mark Minervini, he even talks about how his win rate is like 40 to 50%. It doesn't have to be huge, but when your winners are 3 to 4 times as big as your losers, or maybe even better, that's a better system. Here, Steve goes into more details about it here. A 2-to-1 risk to reward requires a 33% win rate for profitability. That's not much. A 5-to-1 risk reward requires a 17% win rate. So if you can win $5 for every $1 that you risk, you only have to win 17% of the time. All right, so second, your trading system must be built on quantifiable facts and not opinions. Ooh, I tell you, that was one of the things having Steve on early in the podcast was so monumental for me, because he kept pounding me every single time. He was like, Chris, you need systems. You need systems. You need systems. You need to back test these systems. This is not a subjective game. This is a quantifiable math game. Once you understand that this is quantifiable math, you will be successful. Boy, am I glad he did that. I tell you. Buying the dip is not a signal, but buying a pullback to a 50-day moving average when it reaches a 30 RSI and it's above a 200 SMA are quantifiable facts. What he's trying to say is, like, a pullback is not quantifiable. Is that 50%? Is that 50 basis points? That's a huge swing right there between 50% and 50 basis points. But if you buy it on a pullback to the 50-day moving average with the price reaching the 30 RSI, but it's still above the 200 simple moving average, that's quantifiable, right? And for me, I like to just keep it simple. If it's above a moving average, I get in. If it's below a moving average, I get out. And it's so easy to test. And I do that all the time, which you've probably seen if you've seen the podcast before. So your trading system has to be built on quantifiable facts, not opinions. That's my voice breaks. Not opinions. Habit 3, look for low risk, high reward, and high probability setups. So the way that I take this, and my friend Greg Gossett, he's been on the podcast a few times as well. the way he quantifies low risk is like, let's say there's a moving average. You're getting in just as it crosses that moving average. And it could rocket ship to the moon, right? But if it goes below that moving average, which is only a small space, you're only risking a little bit. In fact, let's pull up TrendSpider here. We can look at this trade. So I have JPM open right now as one of my trades. And I got in on this day, August 25th, as it crossed over these moving averages. So it's close to these moving averages. And if it goes back down, I'll be able to get out. But if it rocket ships, right, we're going to let those moving averages go. We're going to trail behind it. In fact, let's go to AMD. This was one of my best trades of the year. I got in as it crossed these moving averages, I think on the 27th here. But the point is not to brag. The point is to talk about how my risk on here was so small because it was just over those moving averages. It was just over the point where I would get out. So if it reversed and went against me, I would get out with a very small loss. But if it rocket ships up, if it shoots to the moon, you can carry that the whole way up. And then as it starts to turn around, that's when you get out. I got in at like 95. So in fact, it was actually this day. I got in at like 95 and I got out at 110. This was a monster trade. And I got out on this date, on the close below the 5-day EMA. Yeah. And I got to keep the bulk of that move, right? I got to keep all of this move. And the only risk I took, actually, there's a cool thing on TrendSpider here that shows a trade. So my risk here was down to the 5, but my profit was, so I had a 17% profit on this with a 1%, 1.47% risk level. So the risk return on this trade was 11.61. So I risked 1 to make 11.6. That's how you do it. You do it when it just barely crosses over, and then you let it rocket ship up and work in your favor, and then you take it off when it doesn't work in your favor, right? I had one recently, XEL. I thought it was going to do great, right? It started moving up, and as you can see, it was crossed over these moving averages. It was going great, and then it turned around, and I got out, like right away, right? So I put in a trade on August 16th. As it's moving up, it just crossed these moving averages. I added on August 20th because that's my trading style. If it's working for me, I'm going to let it work. So I added on August 20th, which was almost near the high of the day, but that's the way it goes sometimes. And then I closed it the very following day, August 23rd, when those moving averages were violated, basically. And it continued to go down for, $2 or $3 extra more dollars from the point where I got out. Now, I show this to say I don't always win, right? I lost on this trade, but I kept my risk small because I was only going to let this moving average, this is how I traded it. I was only going to follow this moving average. And if it continued to go up like AMD did, I would let it run. If it turned around like XEL did, I would get out. So that's what Steve is talking about here. Low risk, high reward, right? Remember the AMD trade, 16x reward on the risk that I took. And we don't know where the stock will go to, right? If I've said it before, you get on at 5, and if it's going to go to 100, you can get on anywhere in between 5 and 100. You just got to know when to get off. So this will be our last habit of the day. And this is the answer to the question, what is the trend? Is the question, what is your time frame? That's a really good point here. Okay, so imagine you trade intraday. Imagine you're a 1-minute trader, right? Let's look at, I don't know, today may not be a great day because the market's moving up. But let's say, okay, we can look at TLT. Let's go to the 1-minute chart. What's your time frame? On a 1-minute chart, this is kind of sideways to down, right? You see that. And I say sideways to down because, as of this morning, it was 148. Right now, it's 148. The trend lines have crossed over, so they're moving down, but now they've crossed back up, okay? That's on a 1 minute chart. Let's look at a 5 minute chart. A 5 minute chart says that this is in an uptrend. Let's look at a 1 hour chart. A 1 hour chart says that it was in a monster downtrend, but it's now looking to break back over into an uptrend. Let's look at a 4 hour chart. A 4 hour chart says, hey, this has been trading sideways for like, a few days, actually most of a month. So it's at 148 now. It was at 150 a month or so ago, and it's been basically trading sideways in that range, right? Then let's go to a monthly chart. A monthly chart shows it was in a large uptrend, and then it got smacked, and now it's trying to recover that uptrend. The answer to the question, what is the trend? What is your time frame? As you can see, that was one stock. That was TLT. And we did it like 5 different scenarios, and each one of those told a totally different story. You have to trade in the time frame that you want. Me personally, I like to look at daily charts, and I'll hold something. If it's not working, a day or 2 or 3, depending on when it crosses back below my moving averages and entry points and everything. Or if it's working for me, I will literally let it work for as long as it takes. It could be 2 months. If it goes 2 months and never breaks down underneath a moving average, who am I to tell it when it should stop, right? That's trend trading in a nutshell. Let the trend go as long as it can, and once it starts to reverse, that's the time to get out. So listen, that was 4 of the, I'm going to try and click back here real quick, 4 of the 39 trading habits from my friend Steve Burns. And this is going to be a multi-part series, like I said. But I hope you found this useful. If you did, smash like, because that allows more people to learn some of these trading habits. And I appreciate it if you would also subscribe and share. And, make sure you come back next time for more tools, tips, and tricks to help you trade faster and trade smarter. I'll see you next episode. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning and how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.